Hi everyone, welcome back to my channel. Today I'm going to talk about a new TradingView feature that sort of went under the radar called Delta Adjusted Gamma Exposure. Delta Adjusted Gamma Exposure is a bit better for informing our trades than standard gamma exposure because the bars can be used to better determine buying and selling pressure. Before we get started, I'll leave several referral codes for trading services I use in the description, including TradingView, Elite Trader Funding, and TradingView that will give us both discounts. Lastly, if you enjoy this content, don't forget to like and subscribe to help me grow this channel. With all that being said, let's get right into it. So we can find delta adjusted GEX, and from now on I'm just going to call it DGEX because delta adjusted gamma exposure is quite a mouthful. So we can find DGEX by going to the ticker options dashboard, and I'm going to use SPY because SPY, this dealer positioning always plays a large part in how SPY and other big ETFs like QQQ, IWM plays a huge part in how those move in modern markets. And if you're not familiar with dealer positioning and how Greeks impact the way markets move, then I highly recommend checking out my video that talks about Greeks and dealer hedging, which I'll make sure I leave a link for in the description as well. But if we scroll all the way down here, now I'm going to pass this dealer positioning dashboard for now. I will come back to this in a later video. This is an incredible tool to really break all this stuff down. I'm a huge fan of it. It gives us probabilities based on historical moves. Whenever we see gamma and delta and Vanna and charm and all those secondary Greeks lined up a certain way, we can get a really good depiction on what volatility will be like the following day. And those of us who are day traders all know volatility is exactly what we want. We don't want these small choppy moves. We want large moves, which volatility helps bring. So if we keep going down, we'll go to the gamma exposure dashboard, GEX, and by default, this is what it looks like. Now, there's a couple changes we want to make. The first thing we want to do is click Delta Adjusted GEX, and you can see right away this shifts the look of it. And the green bars now are going to tell us when we're likely going to see buying pressure, and the red bars are going to tell us likely when we'll see selling pressure. So let's say hypothetically we break past this level here, 416. Because this is a large green bar, this means as we break it and we move higher, dealers are now going to be supporting that move based off of the gamma exposure. So they're likely going to add buying pressure as we continue to move. Whereas if it's a red bar that we break below, we're going to see selling pressure. And it's important to note that gamma impacts delta based on a 1% move in the underlying. So therefore, as we move, the gamma exposure will then kick in more and help support that move or help resist that move, whatever it might be. So we don't want to look at the aggregate of all these expirations. Currently, it's the aggregate of everything. We want to look at the weekly expirations and the monthly expirations. Now, today is August 25th, 2022. So most of the expirations fall at the end of the week, which is tomorrow, August 26th, 2022. And we do see some decent amount of gamma exposure on the following days as well. However, let's say that this was next week, so it was August 29th. Then we want to start looking at the September 2nd expirations, which are the Friday. We want to look at those, and we also want to look at the monthly expirations. Monthly options expirations always fall on the third Friday of the month, which would be September 16th in this case. And that's another analysis we want to do as well. And I'll get into how we can make that easy shortly. But first, I just want to talk about what we're seeing here. So if we click on expiration date and we just scroll up and click August 26th to see that Friday, we can see all of the dealer positioning for that day with the delta adjusted gamma exposure. Now, what this is telling us is that right now, so if we take a look at SPY's price, we could see that currently, now this might fall in the pre-market, but currently we closed right around 419. In the pre-market, it's 418.72. Maybe that will come down a little bit, maybe it won't. But it's important to note that this is updated in the aftermarket. This is updated in the evening after market close every day. So this is something we want to use as prep. This is not something that you should be looking at like intraday for trading. It's to make a trading plan going into your day. So we can see that if we were to come down to 416, we would likely get a whole bunch of dealer support helping to drive that price higher. However, we also have a lot of dealer resistance here at 420, meaning that if we hit 420 and we hold and we start coming lower, we should see dealers sell into that move, which will help push price lower. Now, this white line is actually the cumulative DGEX, which can help break that down as well. So we can see that when we're up here at 416, that this will be essentially the height of the cumulative DGEX, basically the height of the support, whereas here at this 420, we could expect, now cumulatively it's not going to be anything crazy. However, we could see that if 411 it starts falling more, but these lines can essentially help form key levels for us. And the first thing I want to show how we can easily visualize this on our charts without getting too technical here is by going to market net flow, and there's this button here where we can put the GEX levels. And I want to just point out what it looked like today, because this is market net flow for the day that just happened. And I don't leave this on my chart because it just does skew the view, and it also puts gamma levels that haven't yet come into play and aren't close to us. And also this data is old currently, but I just want to show going into the day, we had this big gamma level at 415. And if you traded SPY today, August 25th, 2022, you know that 415 led to some incredible moves. So every time we could see that this is a green gamma level, meaning that we can see support here. Now, the first time we came up to the gamma level above it, even though it was green, right around 417, we did encounter resistance. We fell back down to 415, but then eventually when we did break it, we had even more dealer support. And that's what I'm talking about. As price moves, dealers are also buying into this for hedging purposes, helping push it higher. You could see 415 was a very key level for them to hold. It's where their algos are likely stepping in to push price dramatically higher, which was shown on this chart. And if we look at 415 on SPY today, so let's just do 415, you can see that when we came down into it, so initially we opened under it, and then when we started pushing above it, we had a whole bunch of dealer support, which is essentially through SPY all the way up to that big gamma level. Excuse me, that was at 418. I said 417 initially, but it was actually right around 418. And then we started falling back down after that huge amount of positioning. The dealer positioning helped us out at 415. Then once again, we touch it, we go higher, we reject VWAP. Now this was the lunch hour, so it wasn't, there was a lot of low volume trading happening here, nothing as significant. And then when we actually tried to get lower, it immediately got bought up by a significant amount of volume, and then proceeded just to run the whole rest of the day. And then once we even broke that gamma level above it, we had even more support, and we can just see how big of a deal that was, how they just threw even more volume into it and then pushed us all the way up to 419.50, which just shows the power of dealer positioning, especially when we're looking at delta adjusted gamma exposure. And what's really nice about this is not only can we see it on market net flow at a quick glance to see what we're dealing with, however, I do recommend always checking this as well and just marking the biggest points on your chart, just to note what they are. Also, when we see a lower amount of delta adjusted gamma exposure, oftentimes those can be areas of poor liquidity where we'll just sort of chop around or pen to for a while. And if we scroll up here, another thing we can do in our prep is we can look at the options chart that's here, and let's say we set the time frame to 15-minute because we want to get an overview of all the levels that we're most concerned with. And then we go to gamma levels, and these are delta adjusted gamma levels. We can put weekly expiration, and this will put, it's nice too because it will show us when we have support versus when we have resistance. And as we saw below, 420 will likely act as a resistance, but it's worth noting if we do actually beat 420 and get above 421, we could see a huge amount of dealer support help driving this thing even higher on these weekly expirations. And then you can see down here, as of now, 416 will likely be an area where we'll see a lot of dealer support come in. If we fall down to 416 or even 414, and then we hold those levels and start pushing higher, we should expect market makers to assist with that move. Their algos can jump in. However, let's say tomorrow's a Jackson Hole Federal Reserve meeting. Let's say that Jerome Powell says something that the market doesn't like and sends it flying down. If we break that 412, it could create what's known as sort of a feedback loop, which I talk about in my Greeks video, my options Greek and hedging video, and could lead to just a massive amount of put buying and dealers selling into that to just drive the move even lower. We could see VIX skyrocket, and it could just send the market down. So we don't know what will happen in the future, right? It's not a crystal ball, but it does tell us where we can expect to see market makers start really participating in these moves. And another thing we can do is very easily, we can also pop the monthly gamma exposure levels on here. Now, they aren't actually very different. A lot of this has to do with there's not a lot of buildup for 916 right now. You can just click all and have them all on there on your chart, but this is such an easy way to visualize these key gamma levels that we want to be concerned with without having to fully grasp everything that gamma means and fully understand all the ins and outs of it and look at the gamma bars and try to make sense of it. TradingView has built this tool to pop these on our charts for us, and we can mark them on our own charts as easy points of reference, so we know that as we start to see price hit these levels and start moving up or down, if we can expect dealers to step in to either support or resist that move. So anyway, this is a fantastic tool. I haven't really heard it talked about much. It was kind of like a under the radar release, and I'm very excited about it. I use this sort of stuff in my own training for my own prep work every single day. 415 was a big part of that today and led to a very successful day, knowing that there would be a lot of market maker algo support at 415. And sure enough, all the biggest moves, the two biggest moves happened because of what happened at 415. And there were other factors that played in, such as VWAP and value areas and volume profile, but those were where the big moves sort of had their launch pad from. So I hope that was helpful. If you have any questions, let me know. As I mentioned already, I will be doing a follow-up video to really start getting into dealer positioning, how we can use this incredible tool to make informed decisions in our trading and determine the most likely outcomes as things shift. Deltas are always changing, therefore hedging is always changing, and market makers have to adapt to that, and we can often see them support or resist the markets based on that activity. So thanks again for watching, and feel free to leave a comment with any questions or reach out on Discord.